Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is the weekly free newsletter that we put out. Want to talk a little bit about the market this week, last few weeks actually. You know, the whole bailout plan and so on really made the market a rock all over the place. When the bailout was announced, the market went straight up and then came back down. But this is the funny part about it. When the bailout failed to vote, the market took a dive, 777 points. It's S&P 500. So you know the numbers that I'm talking about are on the Dow. But that was the day that the bailout failed to vote. Then the next day we gapped up and we went up. People realized something. And then everybody, you know, the news media came out and said that the market once is so disappointed with the bailout and so on. And that's why the market took a dive for 777 points, failing to say that the market actually took went up the next day. But look what happened once the bailout actually passed both houses. You know, we actually broke below the low of that day, which I think is pretty funny. I'm going to show you the same thing on the Dow Jones Industrial Average, just to show you how much talking heads and politicians have no idea what they're talking about. Here's this big 777 points, and the next day, up almost 480 points, and then the bill passed one house, and then the bill passed a second house. And look where the market is right now. We broke everything. I'm looking at the futures right now. It looks like we're going to open down 20 points on the S&P 500, which is quite significant. I think what people are looking at is the fact that our government is useless. The bailout bill was so laden with pork, it was unbelievable. And all these bailouts are bailing out basically the wrong people. And it's just more money out of our pocket, and it's a sign of desperation, and frankly, it's a sign of politics. And I really wish they would get on with their work instead of politicking, and would actually take care of what they're supposed to take care of. But that's politics, and it's not my place to talk about politics in this newsletter. So anyway, you know, the market is continuing down because it's saying if we need $700 billion bailout, and which became 850, you know, what's next? I think we're going to drop interest rates another quarter of a point or half a point or whatever. Pretty soon they're going to pay you to borrow money. You know, the market is not really seeing an end in sight, which is the reason why the market is still diving. I do think that we're going to get to a point where, the banks have to start working, have to start having to do their job and lend money out. Same thing as the oil prices. Let me show you oil prices real quick. This is the oil index, and what cured the oil index is the very, very high prices, and now of course it's diving. So anyway, we are in a downtrend, and quite a sizable downtrend, and it's working pretty well for us. We're trading on the short side, heavy on the short side. We're re-entering positions. We are doubling on positions. We are increasing our size on positions. Right now we're carrying about 8 positions on the short side, enjoying it. I'll show you some of them. We got SPR, for example, at 1663. As a matter of fact, let me. By the way, this is RCL, Royal Caribbean Cruises. If you've been around this free newsletter for a while, you know that I called it over here as a free trade for everyone at 30, and now it's sitting at 19. So that worked out pretty well. I'm gonna move over to the 60-minute chart just to show you more exact our trades. 23.39 on RCL, and it's doing pretty well. MNST we shorted at 16.17, and it's went all the way down to 13.80. VMware, that's working very well for us from the 27.62. It's actually penetrating the 22.57. 22.68 was our target, and it's actually penetrating below it, so we're still hanging on to it. Shell, 16.24 all the way down to 13. Joy G, which worked out pretty well for us at 41.09, 37. TRA, gap that we entered on the gap, and it worked out pretty well as well. And last but not least, and that's Apple. Apple is a great trading stock, 107.25, and it went all the way down to 94.65. It was actually down It did pretty well for us. So anyway, we're trading on the short side. Politics is not our goal. Our goal is to watch the market, benefit from the market, and follow whatever the market tells us. Anyone that tries to analyze the market at this time and tries to pick bottoms or tries to pick anything like that, it can get in trouble. What you want to do is you want to listen to the market. Don't listen to the talking head. Don't listen to the politicians. Thankfully, the election is almost here. Thankfully, that's going to be over pretty soon, and the market will be able to finally pay attention to what's important, and the politicians will finally pay attention to what's important. That's taking care of our government and not who's going to get elected. As far as this week, we're planning on staying with the short side. I'm not sure how long it's going to last, and I'll show you why I'm saying that. This is a weekly chart of the S&P 500. You can see the very prominent double top, and then you can see the first wave down, second wave down, and now we're working on the third wave down. This is not exact. This is not exact because there was some interference over here from the Feds, but you can basically see that. I think we're pretty close to the exhaustion, pretty close to the maximum pain that the market can endure before it bounces back up. So we are planning on staying with the short side, trading the short side on the long term on a short term basis. But as soon as it shows any kinds of turnaround, we are looking to bail out of it. On a daily, the picture is very similar as well. 1, 2, basically 3. So we're almost there. One more point that I want to make is the banks have been told that they're going to get bailed out for quite a while. If I told you that tomorrow that sometime in the future I'm going to pay off all of your credit cards, don't worry about making any payments. Don't worry about contacting your credit cards. I'll pay off your credit cards. You'll stop making payments. And that's exactly what they did with the banks as well. They basically told the banks, hey, listen, we're going to bail you out. We're going to buy all your bad debts. So what are the banks doing? They stopped lending. They froze the banks. It's a self-fulfilling prophecy. If you listen to the news on a daily basis and they tell you, listen, the real estate market is going to crash. Don't buy any homes because the real estate market is going to crash. You would stop buying and you would try to sell. And that would cause the crash. Not saying that that's the reason why the real estate market crashed, but it is a contributing factor. If somebody comes on TV on a daily basis and tell you, listen, we're in a depression, we're in a recession, save your money, stop spending your money, your job sucks, you're not making any money, you can't pay for anything, doom and gloom and everything along those lines, people eventually start listening to that and they start convincing themselves that yes, we are in a depression, we're in a recession. They stop spending. What happens when our economy stops spending, people stop borrowing, people stop paying their mortgage, people stop paying their credit cards because they think they need to hoard cash. They need to have as much cash as possible, and they don't care about paying their debts because they're going to be forgiven because the government is going to come rescue them. What happens is an actual crash, and that's exactly what we're having. I think this could have been avoided by a little bit more teamwork, for lack of better terms. And I really wish that politicians and news anchors would spend more time on realism rather than politics. Anyway, that's all I have for you for tonight. Stay with the short side. Look for the market to have that exhaustion, very large volume drop, and then a turnaround. What you're looking for is a day when the market starts on the short side, it starts on the downside, and ends positive. Whenever you see that, take your profits. That's probably going to be the end of the trend. Remember, downside and then close positive. Have a great week, and I will talk to you next weekend. Take care.